That song is really hard, oh Paul. I mean, that song is the bee's knees. I've put it in the Discord channel. If you're a patron and you want that, some people, Paul, set that to their alarm when they wake up in the morning. It runs through my head. Mo, I get so pumped up. It's like my Rocky song. I'm like running through the streets of Philadelphia.
Remember I showed you the picture? I was driving around in my car the other day, top down, had the EM song going, driving down the street.
That is a banger.
Did you really?
I mean,
yeah.
That thing is a banger. And if
I've been listening to Despacito lately.
Oh, have you?
Great song.
For those of you following the show, if you don't know, that Paul's musical taste is that of a, how do I even describe it?
Like 13-year-old girl.
A 13-year-old girl, yeah. I mean,
Lucia's always say that too. She's like, Paul has the musical taste of a 13-year-old girl.
Yeah, like Taylor Swift is like your
First
jam.
off, everybody loves Taylor Swift. If you don't like Taylor Swift, you're an idiot and a moron. And so I go to the garage and I did put our gym playlist on it when I was in the gym with my brother, and he goes, "This is like 16-year-old music."
I'm not scared of it. So everybody, we love you that you're here. Make sure you we welcome you in from all over the world. We appreciate you guys coming in. Paul, I'd be remiss if I didn't bring something up.
Let's hear it.
We're going to enter a few moments of somberness. I think if this happened to me, I would want it to be addressed. Is that a dear friend of ours and partner, Don, has stepped away from the show.
Oh, we're bringing this up now.
I think if I was Don, I'd be watching right now, and then I would be yearning for our friendship, which you still have. But it's a little bit of a blow to the Everything Money channel, in that the Uncle Don, the man behind the scenes, the producer that got us to the moon where we're at, with all of his help and
Don's the one that pushed YouTube to me. He came to the office and said, "We need to do YouTube and focus on YouTube."
Don is here, and he's in the comments, and I'm certain, Paul, I've been fired from a couple channels, and I wish them well on the way, and that was not the case. But I would say
Don's not fired.
I'm saying I had been fired, and that is not the case. If you listen to the show, like I said, it is a somber day for me as a friend. It's just tough when the show must go on, but someone has maybe something in their lives that maybe says, this isn't right for me. And the show has grown so much, Paul. I would say there has been some adversity. There have been some arguments, even between you and I, about how to handle.
Pretty much the only arguments are between Seth and I. How
to handle Mo? Yeah, you're right. I'm not gonna argue with Mo too often, but how to handle this success? How do we grow? Are we doing it fast enough? Are we doing slow enough? We hear these comments about people. What pleases our viewers? What makes them mad? And so in the end,
by the way, I want to make note.
Please do.
Don knows this. I appreciate Don so much, and I'm not saying this to pat myself on the back. I'm really not. I'm saying it to how important Don was to us. He's going to ride along with success for many years to come on Everything Money because of what he's done for us. So I don't say it to pat myself on the back. I'm just saying Don's not gone. Don is just going to take on other opportunities. And I told him yesterday when he told me, I was like, listen, I want the door to be open for a comeback at some point, but we'll see.
And you're true to your form. I would say, no surprise to me. I got home. I had heard the news late afternoon that Don decided to step away, and obviously we wish him well. And we will, Don, you can text me, babe, whenever you want. And sure enough, there's Don in the Discord and the Patreon at 7:00 at night last night, making thumbnails, talking to you people. This is how much he cares. And so, I think you're right. I would love to see Don back in the chair.
Fire Seth, keep Don.
That's true. So I'd love to see Don back in the chair sometime in the future. But at the moment, he's doing what's best for him. And obviously, we love and support him. So we're not going to keep this somber mood. I would say I know Don would want the show to go on because
he didn't die.
I know the show to go on. In fact, he was even doing things when he probably shouldn't have been last night.
Can we get a prayers for Don?
Can we get a GoFundMe for Don's funeral? What's going on over here?
Prayers up for Don. So that's what I wanted to bring up. I couldn't, but I just want to give my sort of thoughts and how great he was. And obviously, I'm excited. Paul, you have taught me that adversaries and where am I going with this? Like sometimes our lows can turn into exceptional highs.
Every single
time.
low.
Thank you.
Is only meant for one thing, and that's to get better. You get to choose, and you used to work for a company. E plus R equals O. Event plus response equals outcome. The only thing we get to choose is our response. That's it. We don't get to choose anything else. And that's from Seth's old company, Focus 3. And it's 100% right. E plus R equals O. We only get to choose our response. And I have always said, when I have a bad situation, at some point in the future, I look back and go, thank God that happened to me. Thank God that happened to me. Every single time.
Donna, I hope you're seeing these comments. People are just like, gone too soon. He's too young. Prayers up. And Seth is on fire today. Hashtag words are hard. They are.
Are you giving away Don?
In a tough moment, they are. But Don is with us. He always will be. I want like a Don bobblehead. Finally, he would never show his face, but I want a Don homage to Don, even if it's in the background. But he's not gone, folks. He's if you're jumping in late, Don is alive.
Yeah, we just freaked out a ton of people.
Yeah, no, you're great. Give Don a Tesla. He might be eligible now. Join our Patreon, Don, if you're interested.
Let's stop this. Let's stop this. Don is not dead. People are like, Don is gone after
Don, click the description and the link in the description below to join our Patreon. You're now eligible to win a Tesla. Who knows? We're giving 2 away this year. So that is our take on Don. That's what I always say.
Tim's over here like, oh my God, what are you guys doing?
So anyway, listen, I love you guys. The Discord has been on fire. The patrons, I love you. I love you. And the market's been tough this week, Paul. That's what inevitably that's what we're here. I've seen the last couple days.
I really don't pay attention to the market anymore because it just goes up.
Yeah, it just swings back and forth. This morning it was down. I mean, we were on free lunch watch, and now we're not. So
free lunch watch, guys. Everybody at Crossroads gets a free lunch if the S&P is down over 1%.
And now it's
at
positive.
One point I saw it was down 0.86%, and now it's back up. Yeah. This morning I texted Mo and my brother and said, "Oh, what happened?" Literally, the market's just plummeted pre-market. We went from a positive to a negative, and then of course there's sarcastic comments. I was like, guys, all the time."
And Mikey. So we have a group chat. Pretty much every morning we talk about the market. And this morning, Paul said it's dropping, and Mikey texts, "You losers still believe that stocks go down."
Like he does it all the time.
Now Ryan Long, Ryan, they're planning Don's vigil in Columbus this weekend. We're gonna have a parade.
God. And Ryan made the funniest
eight-pillar analysis on Don.
Remember the thing that Ryan made of me this weekend with Kathy Wood?
Yes.
Yeah,
Ryan made that.
That was funny.
I mean, I would say for a guy who never had shown his face and just a voice, like the voice of God coming in with that extra stuff we need. There is a lot of love for Don, and I'm glad he's getting it. So, let's see. Paul, your thoughts on the market, on the little bit of chaos going on. We did some videos on
What's the chaos in the market.
Well, the last couple of days I lost a ton of money. Now I'm supposed to set it and forget it, but these ETFs that I buy or these little
how's your little book that gets the market going?
Well, the last couple of days I got slaughtered. I mean, slayed. It's back up to slayed, like down almost 3%.
Somebody told me yesterday that they were down like 13% yesterday. I don't know what they were invested in.
Yeah, somebody in the chat said that.
Yeah.
Oh, then they corrected it and said, no, it was this month.
Oh.
Then they corrected it right after. And by the way, that's our Discord chat where in our highest level patron, he said, he goes, well, it's this month or something like that, which is still a lot for a month.
That's a lot for a month.
But when he said yesterday, I'm like, Jesus Christ,
I thought that was one day.
You're down 13% in one day.
Yeah.
Oof. Did you watch Sven Carlin's Tesla analysis? Did you see that video?
Yeah, I watched like 5 minutes of it because you know me.
It was really funny.
I don't watch videos.
It was really funny. Tesla, Mo, you brought up Tesla's relationship with Bitcoin.
Yeah.
There's been some Bitcoin news, Paul, that you were not too surprised about. Give us your thoughts on
the Ray Dalio.
Yeah, Ray Dalio.
Ray Dalio, Ray Dalio came out and said recently, today, he said, and this makes perfect sense. He says, guys, don't forget that countries can outlaw cryptocurrency. They're powerful countries. We give the government a lot of authority, and they can outlaw cryptocurrencies because you know why? They want to protect their own currency. So when people sit there and what are you laughing about, Peanut?
India is already working on
Who
it.
said what?
Listen, Paul, we're going to get right back into that cryptocurrency.
Okay.
Folks, if you're watching at home, I'm probably red face. We analyze our numbers. Like there are channels that I feel like are complete morons that have 400,000 subscribers. Yet we have a lonely 25 and a solid, you know I love you. We're finding on our stats, you guys love us so much that 71% of our viewership comes from subscribers. Many other channels, it's completely flipped.
Not many other channels. In fact, we had a guy in yesterday who said, I guarantee you guys are 70% non-subscribed people that watch your videos and sort of 30% subscriptions. It was exactly the opposite. We were 70% of our videos are watched by subscribers and 30%, which means for us, we're not doing a good job of getting new people to watch. But the great news is our subscribers support our videos and love our videos so much they watch a ton.
We're just developing this community of love where people know each other. They rip on us constantly, Paul. But when Nicholas says the 6-ounce Yeti says rest in peace, Don, like that ties in so many parts of the show about the bad Yeti.
And then Matt Brown just wrote, I literally had to rewind to make sure Don wasn't really dead. Like,
but the point is, and our patrons as well. Like Paul, we were expecting a very low number of patrons, and
well, our goal was for the end of the year to have 725 patrons. We have 1,647 as of this very second.
So many of you who are watching also decide to invest in yourself and with us, and the software is not even out yet. Now, we've been playing with it, Paul, like I do with many things, playing with that software. You know what I'm talking about, Giggity. And that thing is incredible. And this 8-pillar portfolio you can build.
Oh, did I show everybody that yet?
Spoil this. This is coming out April 15th. We're going to get back to Bitcoin. I don't want to open up that can of worms quite yet. But I'm just saying, like, I want to lead, Mo, which you do a great job too. I want to lead with just thankfulness. It's just incredible. The percentage of you who are patrons and the Discord channel, Paul will just text me like, guys, this is happening. This is real. This is incredible. The Discord channel, they help each other so much.
Yeah.
It's been so supportive. And next thing you know, I asked Trader Mo to send me over some positive messages that he's getting, and just fills up an email of people making cash money on trades together. Talk about it, Mo.
I was sitting at dinner with my dad and brother last night. I'm just like, this is so weird. Like, we made a trade as a group, and all of these people are just making hand over fist from learning from me just for 2 months of how to trade stocks. It's incredible.
And not only that, though, like Mo and I used to have complaints about what software didn't do this. Mo and I are just like, we're just making this software.
Yeah, let's just make it.
So guys, look at this. One of the great things about the Everything Money software, I'm doing this now. The portfolio page. I don't know if I brought this up on Tuesday.
Look at this thing.
You can do 58 stocks in your portfolio. You can save your portfolio, and it'll give you the 8 pillars on all 50 stocks combined. Yep. So instead of looking for individual stocks that are 8 pillars, you can build a portfolio of stocks that can get you 7 or 8 pillars or whatever you want to do. And you can put your current portfolio or an ETF, all the holdings of an ETF in there. The next step will be making this weighted, which means if a stock has 50% of a portfolio, you put 50% of the stock as weighting it. It would affect the 8 pillars on a weighted basis. So guys, when I tell you this is scratching the surface, this is just scratching the surface. I just signed up for more data. I thought the most I was going to spend on data would be $60,000 to $100,000 a year. I just signed up for more data that already takes my costs to well over $100,000 a year, and it's not even all the data I want.
Just for this website?
Just for this website. But it's important to me. It's really, really important to me.
100 grand?
Yeah. So instead of having, one of the things I just signed up for, right now, all the prices and the Sony thing is messed up. But all the prices right now are end of day yesterday. I just bought yesterday, 15-minute delay. I'm not doing real time because none of us are trading 15-minute charts, and the real time cost alone was $100,000 a year. So I said, sorry guys, not gonna pay for it. But you're gonna have 15-minute delay on pricing. That's one of the upgrades I just did. It should be active by April 15th. But I'm working on this thing constantly, guys. This thing is awesome. I'm like dedicating major time and money into this because I love it. We're gonna have back testing. The back testing alone is freaking huge. You can sit there and pick your own strategy and back test it to see how well it would have done over the last 20 years. I believe we're also getting data going back to 1987 on all stocks that existed all the way back there. So not all stocks. I think it's all active stocks that existed back then, I believe. So Guys, we're just doing amazing stuff with the software. You got to sign up because the price is going to skyrocket.
All right, I think we've fuddled around enough. Should we get into what we do, the good stuff of looking at? Should we go back? Let's revisit that. Mo, talk about your explanations about the Bitcoin. Listen to me talk about like an old man. Tell me about that old Bitcoin you're talking about. How many coins do I need? Go ahead, Mo.
So Paul was talking about how they're trying to outlaw it in all of these other countries. Okay, this is as good as it's going to get. So India is already looking at outlawing Bitcoin. They want to ban it because they want competing currencies. If they can find a way that it doesn't compete with the dollar, then it might work. But Dalio's point was that back in the Gold Reserve Act of 1934, right here, and I said this on my morning show earlier today, they made it illegal for individuals to own gold because the government leaders didn't want gold to compete with the money and credit storehold of wealth. So it has happened before. This is kind of the same thing. Unless the government can put their hand in the cookie jar, it ain't gonna work. I mean, something's gonna happen. And you know that the fact that India is doing this already, not that they have a great currency, but they have a massive population. If they can do it, we can certainly do it.
Yeah, I don't think that people realize the strength of the government to literally just sit there and say, oh yeah, Bitcoin, we're done. I mean, I just don't get why people will be shocked by that. We let the government do everything else in the world. They're gonna ban Bitcoin at some point. They think it's a threat to their own ability to, especially if it's non-traceable. If Bitcoin's non-traceable, you think the government wants non-traceable income going through this country?
Yeah, how do they get their taxes handled?
Exactly. You think the government's gonna be like, oh, you know what? That's cool. Like, I get it, guys. It's exciting. It's going up a ton. But at some point, the government will say, wait a second. If we can't trace this, we can't trace income, we can't tax that, you're fired. You're out of here. It's not going to happen.
Yeah, I didn't want to open up. I mean, I kind of did and didn't want to open up the Bitcoin discussion. But if you're new to the page, Paul's been very adamantly against investing in things that he's not familiar with. And this is certainly one of them. And so that's it. It's just interesting. Rest in peace, Bitcoin. All right, Paul, I think we should get into some 8-pillar analysis.
Let's do it.
The bread and butter of the Everything Money channel. Make sure you guys tickle that thumbs up, just like you tickle Paul's little belly. Paul, that belly's looking really good.
See, it's funny. I feel heavier.
None of the chest.
I keep telling you, if you get the chest to pop, this is all gonna the
you
illusion
do
will
push
become
ups.
small.
Yeah, look at you.
That's what it's all about.
I'm semi-hard nipple here, not so hard here. Why is that?
Great. Well, make sure you guys are fondling the thumbs up.
I love when Tim is in here because Tim just sits there shaking his head.
Tim just shakes his head all the time, and then he probably goes home and says things that he thinks aren't risky because I say way worse, and his wife's probably like, "What are you talking about?"
Okay, the first one we're gonna do. People keep asking Paul, we're gonna do it. It's Pinterest, Paul.
I love Pinterest.
I know you stay up at night on your little iPad and you're pinning to your phone.
Don't make fun of that.
I go on Pinterest
absolutely do it.
once a day. I go on Pinterest once a day.
I don't do that much.
What are you pinning?
Huh?
What are you pinning?
Well, I don't pin things, but I look at home ideas. There's so much information on Pinterest. I have a stain right now on my shorts. You know what I did to figure it out?
Go on.
I went to Pinterest and said, how do I get a black stain out of white shorts?
No, you could go to the Everything Money channel because we have a whole how to get stain out of your shorts, right, Paul?
That's the next thing that's coming to the
whole
Everything
playlist,
Money channel is the blog.
But anyway, go ahead, Paul.
Pinterest is awesome. Anytime you have an idea for anything, you go to Pinterest. It's not just for women, although it's all about women, and it's a very high demographic because of the fact that women spend money, and they spend money on nice things. So Pinterest has a lot of potential. I remember reading something like the revenue per user of Pinterest is like some insane, I don't know the exact numbers because I read it like 2 years ago, but I love Pinterest. Love it. When I was remodeling my house, went to Pinterest. Anytime I get an idea for something, I go to, like there's an area in my new basement, there's a room that's like, has like a, you saw it, Tim. Remember there was that room with the weird shower and it was weird with a toilet? I'm like, this would be a perfect dog grooming room. So what I do, I went to Pinterest and looked up dog grooming stations and just started getting ideas for it. And I started saving them in a folder and going about that. What's up, Peanut? What are you laughing about?
My job is to put myself in the place of one of our viewers. You know, Paul, and the year's been tough. People have lost their job. Money's running low. And then you turn on a show and a grown man is building a dog grooming room in his new mansion. Congratulations for all your success. A dog grooming room. I didn't even know this existed.
I love my dog.
Let's get after Pinterest. Pinterest is incredible. It's been around for a while, Paul. I use Pinterest in terms of my wedding photography, Mo. It's a great outlet for sharing my work, much like a Facebook or an Instagram. You can get it out.
Really?
Oh, because of course the brides, they want to see the flowers, the dresses. They want to see outdoor weddings. They want to see spaces.
How often do you get a sale from Pinterest?
I think it's very little people say I found you on Pinterest, but
It's more like we found you here, we found you here, we found you
But
here.
I'll tell you what, I literally now that you say that, I remember I had a bride said I saw a cake photo on Pinterest with your Seth and Beth logo in the corner. Found the website, hired us, spent 10 grand. It's amazing. Yeah. So let's get after Pinterest.
It's going to be a very boring 8-pillar analysis, and here's why.
Go ahead, Paul.
First things first. They've only been public since mid-early 2019. Market cap of 43 billion, revenue of 1.7 billion. That is 25.5 to 1. Remember, guys, Microsoft's like 7 to 1, right? So, okay. They don't make money. They lost 128 million last year. Good news is they had cash flow of 11 million.
Are you shocked by that? For a company been around so long.
No, I'm not shocked by that because they're still trying to grow and establish themselves. Cash flow, $11.5 million bucks. Now, this is a growth, and this is should I draw the growth analogy I did before?
Please do.
Because I like this analogy now. So we talk about growth all the time with value. People say, oh, Paul doesn't care about growth. I absolutely care about growth, and here is why. I always draw the analogy of, let's say a company makes, $1 a year for 5 years. How much you want to pay for that 5-year stream of income? You'd pay $1 all day. Why? Because you can pay $1 and get $5. Would you pay 2? Yeah, probably. 3? Maybe. 4? Probably not, etc. Now, when it comes to a growing company it's losing money to start, let's say a company's going to lose 20, then 10, break even, make 20, make 40, then make 80 bucks. Overall, guys, they're making $110 over a 6-year period.
I really like this graph, Paul. You used to do the 1, 2, 3 always going up, but this is a nice way of saying, okay, what if we're slowly not losing as much money and we're heading in the right direction?
Because remember, the price you pay for a stock or any investment is the present value of all future cash flows. What are you willing to pay today to get $110 over the next 6 years? That's it. That's all we're trying to figure out here. Now, I'm assuming here that these 6 years are known. The hard part about investing is we don't know the future. The future is the hard part. But assuming this 110 here, what do I want to pay? I want to pay 50? Yeah, probably. I'm going to over double my money in 6 years. I want to pay 60? Maybe. 110? Probably not. Why would I pay 110 to get 110 back? But here's what people do. Here's the reason I don't like hype companies that lose money. Usually what people are paying is, yeah, I'll pay 500 because I think the future is going to be even bigger. And in that case, I go, that's too risky. I'm okay investing in something that's losing money. The question is, then I go back and say, okay, a company like Pinterest is worth $45 billion today, right? $45 billion today. Let's say today it was a stabilized company selling for exactly what it should. Let's take it and say aggressively, it sells for 20 times earnings. That means you got to get $2.25 billion a year in profit. Now, their technology. Let's assume their bottom line margin is high at 20%. At 20% margin, what revenue do you have to get to make $2.25 billion? You take $2.25 billion divided by 20%. That is $11.25 billion, right?
That is 11.25.
Okay. You need $11.25 billion in revenue. So what do they do in revenue now, Seth? What did we say they did in revenue now? $1.7 billion. So according to that quick assumption, right now they do $1.7 billion in revenue, and they need to do 11.25 to justify $45 billion. That's where I get a disconnect. That's where I have a problem. That's where I have the problem. Now, if they were selling for $10 billion, let's talk. Because at that point, their margin, at that point, divided by 20, $500 million in profit is needed to justify a $10 billion valuation at 20 times earnings. And then on profit, they need to make $2.5 billion in revenue. Guess what? They do $1.7 billion today. That's pretty freaking close with a lot of growth potential. Now we're talking. So I'm taking a company that's losing money and saying, okay, they're going to lose money. And by the way, this is very simplistic. There's other things that are going to affect that, like are shares increasing? Are they decreasing? Are the margins right? Am I right about 20%? I know there's a lot of numbers to throw at you, but the point I'm trying to make is every company on their current market cap has assumptions in there. The question we're trying to decide is, are those assumptions justified? I would need on a stabilized company $11.25 billion in revenue at 20% margin to justify today's valuation. We're nowhere close to that. And I look at that saying, okay, so if revenue goes up by 4 times in the next 3 years, what's going to happen in the market cap? Everybody's going to go like, oh, this is amazing, and drive the price higher. So when it finally does $11.25 billion in revenue, it's done so well, it's a $100 billion company, potentially. Yeah, I don't want that. I don't want that at all. That's what I'm trying to do. I'm trying to sit there and buy based on assumptions that are reasonable. And I'm okay if they're losing money, as long as I see a path to profitability and that I think they'll be highly profitable enough to make up for things in the future.
Our dear patron Ryan said the art is kind of what your beliefs are about the company. This art of investing you're talking about, Paul. So he says,
Correct.
What is the best way to remove the most speculation from something before making an investment?
The best way to do it is to buy already established companies with very consistent cash flows that are growing consistently and not erratically. You're never going to get rid of all speculation. And in essence, speculation is always in a sense of you're always making assumptions that could be wrong. If you call that speculation, it's not really speculation. Speculation is when the only way to make money, first off, you don't have a good way of getting paid back unless the stock price goes higher and higher. That's the speculation that I don't like. But again, if you look at the income statement for Pinterest, let's go quarter to quarter. I mean, guys, this is pretty effing impressive. 190, 273, 201, 261, 280, 400, 272, 272, 442, 705. Check, please. And these two right here, big drops, were COVID.
This is revenue growth over the past.
And they actually made $200 million last quarter. Wow, look at that. They made $200 million last quarter. That's impressive. But look, every other quarter, they lost money. Now, the question you have to ask yourself, is this sustainable? Is this sustainable? If this is sustainable, guys, if this $200 million in profit is sustainable and growing, how much is it going to grow? Does that make today's price reasonable? Sure. But again, you have to sit there and decide. If you're assuming $200 million a quarter in profit and it's growing, what does it need to grow to justify $45 billion in value today? That's all we're asking here. Investing and the art of it is all about your assumptions. What does it have to go here today for you to be happy paying $45 billion? What does it have to go to here in the near future for it to go to $45 billion in value today? What's the present value of all those future cash flows? The great news is, with our software, we are building a stock analyzer tool that will let you put in those projections or even tell you, hey, if you want to pay today's price, you need to get this kind of growth out of it for that to happen. And you have to decide, is this reasonable?
You talk about growth, and one thing I see, I do pull up some of these hype YouTubers because I want to make sure we're doing the right thing, Paul. I like to follow what I don't think is correct sometimes, and you never say the words projection. These guys they always talk about, look at the projections 10 years from now. The company I'm thinking to myself as I'm driving, listening, like,
guys, let me ask you a question.
What projections are down? I mean,
you know yourself better than anybody in the world. Your projections from 10 years ago, are you hitting them? Better? Worse? What are you doing relative to your projections 10 years ago? There's a reason why the 30-year treasury pays you the highest rate of income. It's because of all the unknowns for the longer periods of time. But yet, we pay a premium for assumptions over longer periods of time. It makes no sense. The US government pays you more money to say, hey, give me your money for 30 years, I'll give you more money than if you give me money for 10 years or 1 year. Why? Because there's so many unknowns. It's the whole chaos theory. Is it the chaos theory? The one that a butterfly flaps its wing? No, it's not chaos theory.
It's the butterfly effect, right?
Butterfly effect.
Yeah.
A butterfly flaps its wing, a billion years ago, it affects all of this today because those ripple effects so many years on the road. Every single decision a company makes in the next 2 years will affect the 10-year projection. I want you guys to remember, Amazon never hit their 5 and 10-year projections in the early, mid, late 2000s. They were always short of it in terms of profitability. So the company like Amazon, that was like literally one of the most successful companies of all time, didn't hit their projections. So before you make a decision based on, just ask yourself, is this a reasonable projection? Value investing is about making what we perceive to be reasonable worst case assumptions and projections and seeing if it still works. That's what a value investor does. We're still making projections, but we're being more conservative about it. Because our theory is we have 10,000 stocks out there. Find 20 to 30 that on worst case scenario projections, the companies are selling for less than that. That's 0.2 to 0.3% of the companies. I'll do it. I'll figure it out.
Greg is asking which pillar covers butterflies that you're talking about, Paul. We'll get to that, Greg. Great question. Go ahead, Mo.
Paul, I have a question for you.
Yeah.
So you said the revenue was down during COVID?
Yeah, I would have thought it would be higher, but probably ad costs were cut.
Yeah,
I'm wondering if people cut their ad costs.
Because I'm just looking at it as saying that all those companies that did remodeling of homes and furniture and all that.
I think a lot of people cut their ad costs though.
All right.
Because Pinterest can make their money off ads, right?
Yeah.
I would be assuming that companies are like, oh crap, we don't have people even to fulfill these orders because whatever, we're going to cut our ad costs.
Okay.
I'm assuming that. And that's one of the things to do as part of your due diligence.
Should we keep looking at Pinterest?
I think for Pinterest, it's a play. Let's see. I bet you their balance sheet's pretty solid. $2.3 billion in cash on. Oh my God, this is incredible. They only have $367 million in total liabilities. They have.
Wow.
Can we go back? Can we
They have $2 billion.
For my sanity, can we 8-pillar this?
Let's 8-pillar it.
Okay. Let's go to the initial numbers. The PE ratio, which may be leading our 8 pillars. Paul.
X, negative 7.5% profit margin, 2 X's there. No dividend yield. Return on invested capital is a little skewed here because it's negative because they haven't made money over the last 5 years. So far we have 2 X's.
The revenue growth, pillar number 3, is up. Should we look at profit growth, Paul?
Let's go to profit growth.
Thank you.
Profit growth.
Make sure you guys are tickling the thumbs up.
Profit is an X. It went from negative 63 million to negative 128 million.
Oh boy. Okay.
In terms of a full year. Balance sheet is a check mark. They have plenty of cash on hand. They have $2 billion more. So when you're paying $45 billion for the company, you're actually only paying 43 because they have $2 billion more than all of their liabilities combined. That's what I love about tech companies. They tend to have very low debt when they're starting out.
That was assets over liabilities?
Yes, sir.
Free cash flow?
Your cash flow is a check mark. We only have 3 years of full free cash flow. We went from a negative 22 to a negative 17 point. Sorry. We went from a negative 82 to a positive 11.43 check mark. So their free cash flow is getting better. Now, what free cash flow do they need? I do think they need like around at least 1.5 billion in free cash flow to justify today's money. And they're at 11.43 million. So they need to make some major strides. But last quarter, let's see what they did last quarter in free cash flow.
Please do.
Last quarter's free cash flow was $100 million. All right, so they're getting there. They're getting there. They need to do about $500 million. They need to do about $400 million a quarter to justify today's price. So they're getting there, but it's still a ways away. I know it sounds boring, but I would be cautious on this one. If you want to ride the momentum or trade it on charts, by all means do it. But from a value perspective, you just need to be patient. That's it. But I think it's a great company that has potential, and women love Pinterest, and we'll go from there.
So bring it on home with what do you think the company should be valued, and what about what price target would you like to buy Pinterest at?
I think the company is an $8 to $10 billion company, which means it's got to drop in price by 80%.
Oh boy.
Oof. Yeah, which means it's got to be $14-15 a share.
Wow.
Actually, this was just last summer, so.
Was it really?
I mean, yeah, if you zoom out and just start looking, I mean, look at that.
Oh, geez.
Yeah, last summer. So
look at
a year ago, it was $11.
as you're saying it, Paul, you're like, you're crazy. That was last summer.
Oh, by the way, but let's see number of shares outstanding. They are increasing their shares outstanding. That's
what is it? Somebody in the chat wrote, I can't wait till Paul sees the shares outstanding.
Well, it went from 530 to 618. It's a big jump.
Yeah. Okay.
So right here we have shares outstanding. No, what the heck?
So we are beta testing.
There's an error. That's why. There's an error.
We are beta testing the Everything Money website. It is coming out in a couple weeks, and our patrons are frothing at the mouth to get it. But
oh yeah, the shares outstanding is jumping up big time.
For all of you in the Bid and Ask Nation, which is the middle tier of our Patreon level, if you're trading and making money, you're probably interested in what the
here it is. I'm sorry.
Go ahead, Paul.
No, now it is. There was a
cut me right out there.
So right here, guys, there's basically one check here.
You're right. One
no,
check.
That's why. It's only 3 years. So one of the issues we have in the thing, I got to write that down, is if there's not 3 years of data, it sometimes shows an X when it shouldn't show an X.
Now you have 8 developers working on this website tirelessly, so I'm sure we'll get this fixed within the hour. Trader Mo, give us your thoughts on Pinterest and trading this beautiful company.
Okay, so before I get to that, I always say that gaps always are going to get filled. I want to show you guys an example of a gap that happened back here and a gap here that did not fill. So I say always, but when I say always, I mean like 99% of the time. There's a very good chance that this stock price is going to come down, and we already do see that it's a downtrend coming down. So just be aware that when I say gaps always fill, yes, they fill, but gaps can take a year for that gap to fill. But there is no support at that level. So let's get into it and see what we can do with it right now. Let me go over to a daily chart real quick, just so you can see this mess. So we're sitting right below our 100-day moving average, our 50-day and 25-day moving average. So this is a lot of resistance that we need to get through. Until you get up into the $78 range, you're not going to have much movement unless there's some big news out there that precipitates that move. So from my perspective right now, we are still in a downtrend. What we need is that red line down here crossing through yellow and moving up. I don't foresee you being able to buy this stock confidently until you get to probably $75 a share. And this goes back to my theory of buy high, sell higher. Remember, when we're trading on charts, you want to be giving yourself the best opportunity to make money, the best probability to make money. Buying right now because the price is low is not going to give you that opportunity. If you get to 75, maybe you'll get a ride from 75 to 87. Make that money a lot more easily. Make it easy on yourself. Don't go crazy.
Yeah, Mo, that was good. I am following along the Trading 101 playlist on YouTube, and we think it would be very great for our patrons to just have Mo straight up teach me how to day trade. I'm hoping this could be something I do very seriously, Paul, in the next few years.
Can I ask a question?
Please do.
How many requests do we get in every live stream for specific stocks?
How many requests?
Yes.
You know, so I do say, we did a 90-minute show, Paul, with just our patrons. There's about 100 people there, 150 people there, and we had 2,700 comments.
Yeah.
So like what I'm scanning through while I look like a fool here hosting the show and not answering your questions or doing your calculations is that sort of chaos that is like how many stocks people are requesting. I definitely listen to our patrons more, and now they're catching up that if they tag my name, it gets my attention more. But it is a ton, and we're going to work through some of them.
Here's what I'm going to announce.
I have some interesting ones coming up. Go ahead, Paul.
I'm going to announce.
Oh, I see where you're headed with this.
Where am I headed?
You're going to go. Please do. Go ahead.
We're going to start doing the super chat where people can pay to have their. But I'm going to make it. And the reason being is I don't want to have everybody just like constantly be, hey, what's this? And I'm going to donate the money to charity because I don't want the money. It's not about the money. It's about having a more organized, like, hey, if you really want to hear about a company, it's going to cost you $20 to make the request. But I'm going to donate all that money to charity.
I think this would just sway, and some of our true OG homies might like, is we love new subscribers and we welcome you, but people do just jump in sight unseen. I've never seen your name before, and it's like, do Tesla, do Bitcoin. It's like,
we're trying to make it so that everybody comes here to learn, and we learn together and say, okay, how do we find a stock? And like I did that, I did the example of putting the show on, putting the years and years of, there's things I'm going to go on a tangent about to teach a fundamental viewpoint. And then I look at the screen and there's 20 people saying, do this stock. And I'm like, I get it. I don't blame you. But at the same point, I want to make sure that we're giving access to our patrons more on the front side. They're going to get the free requests because you know, our patrons are already paying us. And the people who want to make requests, because I think it's valuable if somebody wants us to really analyze a company, is going to be a $20 charge, but I'm going to donate all the money. So if we collect $200 in an episode, I'm going to donate after YouTube fees all that money to charity because I don't want the money. It's just I want to have a more organized way of doing it.
And the patrons want to get involved with picking the charity. I'm certain that could possibly happen. So, all right, Paul, final take on Pinterest. What are your thoughts?
Like I said, I know it sucks, but it's got to drop a lot. Now, it can build into its value if this bull market keeps going. It could definitely build in this value. But you really got to get a big, I really do think it's got to generate some big revenue for that value to be justified today, especially with their diluting of shares. I mean, their shares outstanding are skyrocketing.
All right, let's all take a breath. You know, I love you. Tickle that thumbs up, of course, as we're tickling Paul's beautiful abs that he's been working on ever so gently. And let's see. Paul, the next stock ticker we will do is DAD.
By the way, Jake Sanborn wants less stocks, more Paul.
I saw that.
I agree.
The next ticker symbol is DON, Don. This is Wisdom Tree U.S. Mid-Cap Dividend Fund.
DNOW, you mean?
Don.
DNOW.
Don is a ticker symbol. One of
You
our
told me DNOW.
I know one of our patrons want this. I'm totally joking because we're
Oh.
totally not going to do this. But Don is a ticker symbol. We love you, Don.
Okay.
Isn't that funny?
Is Seth a ticker symbol?
Nobody caught that joke. You guys are incredible.
Nope.
So.
Seth is not a ticker symbol, and Paul is not a ticker symbol.
Momo is.
Momo is, and Mo is.
Yeah.
Let's look at DNOW is a ticker symbol. DNOW. This is Distribution Now. This is Industrial Sales Supply Company. I put sales in there. They're out of Houston, Texas, founded in 2013. I see some of the patrons loving this. Someone is saying this is a Michael Burry stock, one of our favorite movies, Paul. You know I love that movie. And from The Big Short. And so we're going to see what's going on with DNOW.
This business is in the service, in the machinery. They provide materials for the energy business, oil drilling, gas, all that stuff.
And this is
How has that been going lately?
It's been picking up of late.
When I say lately, the last 4 or 5 years.
Oh, very, very, very poorly.
It's a very tough thing. Now, Michael Burry is a brilliant man. This is what makes value investing different. I would have probably ignored the stock off the dribble, but Michael Burry's seen something. He's also one of the first people who said GameStop was a buy. He made a lot of investment in GameStop at $3 or $4 a share. He loved it. He made a ton of money. For me, I'm ignoring this company because of such a long track record of losses. Why? Because the industry has sucked lately. Not losses, not lots of losses. Well, yeah, there are lots of losses. 1 year of profit. Look at this revenue, guys. 4.3 to 1.6 over an 8-year period. And what happened? And think about it. As gas prices plummet, people are going to do less and less. What is it? Refining, mining.
I think it's a little bit both. Refining.
Is it mining? I don't think you mine.
Drilling and then
drilling.
refining.
Thank you. Mm-hmm. They're going to be less and less being done of it. So of course their revenue is going to fall. So let's go do our good old 8 pillars. I love how people pick the biggest money losers for the 8-pillar analysis.
Well, so in general, in 2017, the stock hit upwards of $22. It's currently sitting just below $10. And wow, look at that, Paul. In 2014, it was $35, $37, almost $40. So
yeah.
Wow, look at this. Okay, Paul, let's get after the 8-pillar analysis.
$1 billion market cap.
Okay, $1 billion.
Net income loss of $430 million, which gives us a negative PE, X. Negative profit margin, X. 5-year free cash flow. So here's the interesting part. The last year, they did $181 million in free cash flow, and the 5-year average is 107. So it looks like the free cash flow and the net income aren't exactly jiving here. Yeah, that's interesting. No dividend, of course. They have no money.
Revenue growth over the past 5 years?
Revenue growth is an X. I don't even need to show you. It's 2.1 billion out of 1.6. Profit is an X, negative 234 to negative 427. And shares outstanding is an X, 107 to 108. Not a big jump, but still an X.
Okay, 5 straight X's, current assets over current liabilities, Paul.
So I love this. Oh my gosh. This is why Michael Burry, I think, likes this company.
Go on.
Look at this, guys. It has $1 billion market cap. Remember?
Yes.
Cash on hand is $878 million. Okay? Their total debts, forget about current debts, total debts are $300 million. So they have $575 million of extra cash lying around, which means when you pay $1 billion to this company, you're actually only paying $425 million. There's the key. Because total cash on hand is more than all debts, not just current, all debts by over an extra $575 million. Basically, when you buy the company, you're only paying $425.
Now, that average free cash flow over the past 5 was 107, Paul.
Was it 107?
So we're skipping around a bit, but basically you've jumped to our free cash flow growth.
Our free cash flow multiple is like 4.
This is pillar number 8. And typically we're looking at something like 20. But this free cash flow average is very close to the actual mark. I'm sorry.
And guess what? They've had free cash flow every year in the last 10 except for 1. Am I right?
So are we going bonkers and buying this, Paul?
I want to understand what the losses are for.
Because I wanted to ask you
is it write-downs? It's probably write-downs.
Before you got to that, I wanted to ask you what Michael Burry is seeing in this that Paul Gabriel is not.
Let's see. So we're going to look here and go, we're going to sit here and look at so special income and charges in the last 2 years. Look at that. 2 big numbers. They lost 120. Okay, this is making more sense now. Interesting, guys. All right, this is interesting. They would have shown a profit. So listen, this might be, so there's a couple of ways to do value investing. They might have a lot of assets that they can sell off. And his comment's like, listen, energy is low. When energy, oh, by the way, if he bought it at like $4 a share, he was freaking paying $0 for the company then. Think about it this way.
Go on.
Okay, this is it. The
Look
company is $9.82.
Look at him go, folks.
$9.82. Mo, what was the low last year?
The low was
In 2020?
$4.03.
$4.03.
Oh, boy.
That means the company was valued at about $400 million last year. Remember what I said? They had $575 million in extra cash. So you're paying $400 million and getting $575 back. You're basically able to buy the company, shut it down, and get all your investment back and make an extra $175 million.
Brilliant.
So that's probably why Michael Burry liked it. He was like, wait a second, I can buy the company for $400 million, and in the bank is extra $575 million after I pay off all debts. I can just buy the company, pay off all the debts, shut it down, and get $175 million. That's value investing. That's value investing. So what he sat there and said is, this thing is worth more dead than alive at $4. At $4, he's literally better off just saying, I'll buy the entire company. Everybody's fired. All my creditors, here you go, and I'm still getting my $400 million back plus an extra $175 million bucks, which is a 45% return or 42% return by just doing something which is very basic.
Someone's saying that Burry paid an estimated $7.18 on average for this shares.
Still pretty good.
Mm-hmm.
Still, he's making his money back. Because $7 is $700 million. What is it? About $700 million minus $575. So he's basically sitting there saying, I'm paying $125 million for this business.
Dante is saying, but is this now a short, Paul?
I wouldn't necessarily say that. Remember one thing, guys. If energy makes a rebound in pricing, this company's going to make a ton. So you're basically able to buy. So let's look at the history of the company. I'm going to go to Y charts because they're going to have better. So price to sales ratio, guys, right now is 0.661. Let's see the history of it.
Remind me what that is again. I mean, I know the terms, but just for our folks out there.
The price to sales ratio is the market cap divided by sales, right? It's gotten as high as 1.15. Michael Burry was probably buying it around 0.4, 0.5. So listen, if energy makes a comeback, guys, you can make a killing on this thing. Let's say they make a comeback and all of a sudden they're making $4 billion a year in revenue again. I mean, this company could be a $2.5–3 billion company. I don't know, but I see the whole play that Michael Burry had. So much cash on hand, very little debt. I'm assuming that's what it is.
Do you like his style of investing? People are asking.
I mean, he's brilliant. I mean, he's like Gary. He and Gary are like, he might be even more thorough than Gary. I don't know.
And he has the patience of nobody. I mean,
yeah,
his
literally,
patience is incredible.
In the movie, they weren't joking. He would literally read all the credit scores for every single, mortgage security. He'd be like, oh, let me see all the credit scores for everybody in there. He'd go through the Excel sheet going, okay. And the guy was like, nobody does that. He's like, well, I do it. Yeah, that's the point.
Will you write down Gary's channel? A lot of people ask how to spell his last name.
I'll just put it in the chat right now.
Yeah, or you can bring it up. And as well, we're getting some insight from Jared Morrow, a fellow YouTuber here in Akron, a great YouTuber who's working with us. And so if you guys aren't following Jared, Jarrad, Jared Morrow, follow him for a great.
Oh, Jared's watching?
He might not be. I just remembered that while we're in the thanking phase,
Oil
we'll thank
is
Gary.
dying, but not in 4 years. I don't agree with that.
What'd you say?
This person said oil is dying, but not in 4 years. I don't agree with that.
Yeah, I have no idea.
Yeah, oil ain't going anywhere.
What's that, Paul?
Oh, Messiah. He can see. That's so bad. He can see the future through his eye.
Oh, God.
He only has one eye.
Yeah.
That's right.
Glass eye.
Someone said this is Benjamin Graham level in value investing or Danny DeVito. That is a funny.
No, Ben Graham that's exactly it. It's kind of like the cigarette butts. It's like the cigar butts. It's like you want the last puff of the company. Like you're buying that company so cheap. You're getting the last puff, but it's okay because it's still worth way more dead than alive.
If you're into Bidnass Nation and you're interested in day trading momentum, we'll head over to Trader Mo. You've been working out. I saw you in like a cut shirt. Paul, you saw him yesterday in the workout. I mean, he's just shredded. I mean,
yeah, he's very. He and I weigh the same amount, and he's 3 inches taller than me.
Yeah, I think at some point you should do the whole show shirtless, Mo. I mean, just show it, baby. You got it underneath there.
I have a good. Here, I'll do a plug for
your abs.
Rohan, Fit Active Sports.
Hey, Quinn, are you changing those screens over there, bro?
He's doing a good job.
He's
I'm
on
watching.
it.
Yeah.
I just saw you guys switch off, and I didn't see any switching.
No, he's doing a good job.
I've been talking here for 5 minutes. He hasn't talked to me.
He's been on me the whole time.
Go ahead, Trader Mo. It's not about Paul. Go ahead.
Hold on. Let me.
It was about you two, you idiots.
It is about me.
This is our high, this is our low, and this is our 50% rule. So guys, I want to show you how powerful this overhang and 50% rule is. All of this is just negative pushing down because when people get When the price moves up on you, they just start to sell their shares because they think it can't go any higher than here. Right now, it's getting up to that point, and it's falling again. So let me zoom in here and show you. And whoever said, is this a short? I don't know if they were talking about from a value perspective or trading perspective, but if they were talking about trading, they're pretty good. I don't know if they're in my bid and ask nation, but this thing just dropped into the sweet spot perfectly. We're making great engulfing candlesticks coming down. Our bid and ask difference is 2 cents, 3 cents. I mean, this is perfect. If you want to add shares to this today, or you guys want to short this, if you have never shorted before, do this on paper. If you're good at shorting like Bogdan, go ahead and do it.
Is Bogdan good at shorting?
Bogdan's great at shorting.
This is one of the patrons you're talking about.
What makes him good at shorting?
I don't know. He just loves shorting.
Do you know Bogdan, if you're watching?
He's always making money. I mean, he just does what I say to do. And
I see.
It just works.
Do you know?
Guys, I'm telling you.
Go ahead, Paul. I'm sorry.
I'm telling you right now, whatever you learn to do in terms of trading, momentum, or charts, you've got to stick to the system without question.
Bogdan sticks to the system.
Everyone, literally, it's been proven time and time again by the most successful traders. The ones who do the worst, the ones who deviate, because they think, oh, it's maybe not this. Do it. The system works. Do it. When they backtest these strategies, there's always a reason not to listen to the strategy in year 3. But if it shows good returns over long periods of time, follow the system. Do not deviate. You will deviate, and then you'll blame the system. And there's only one thing to blame: yourself. That's it. Follow the system. Stick with it. That's it. You will be very successful because just like value investing, if you stick with value investing, it works. Will there be periods of time, 3, 4, 5 years where it doesn't work? Absolutely. That's why it works. Because everybody gives up. Let everybody else give up. If you stick with it, you make a lot of money.
Seth, I want to finish this and then talk about sticking to the system of something that we did yesterday in the Bid and Ask Nation.
Go ahead,
So if you want to do something with this, add at the bottom of today's candlestick. Whatever the low is of today, go ahead and add shares short if you want to. Now, speaking of sticking to systems, yesterday we got out of Cardinal Health. And the reason we did, and the reason the stock price is up today. So I'm missing out on gains right now, but I stuck to my system. There was resistance, as you can see, all throughout this area. And it hit that resistance area yesterday. Instead of being greedy and saying that I want to try to squeeze maybe another dollar out of this or something, right when it hit that resistance area that I've been seeing for the past 2 years, I sold my shares because I did not think that it was going to get through that. Could it get through that? Sure. But I am sticking to my principles and my rules. That is why I am a successful trader. I'm not trying to grab a little bit more and deviating from what I know how to do.
A final take on distribution now, Paul.
I'm not going to do it. I mean, Michael Burry is a deep value investor. He has way more confidence in me to go into things. My goal is to buy larger companies in deep value. That's what I want to find. I want to find I'm going to make less money than Michael Burry as a return, but I would rather do that. That makes me feel most comfortable. I want to find a company that's just being mispriced. Everybody thinks it's not good, even though it's still growing.
How are we feeling out there? How's your voice?
My voice, I have the water next to me, thanks to Tim.
Mo, talk about how your morning show is going. Give an overview of the times you're going live and when it's recorded and what you're doing in the mornings, please.
So mornings, Mondays and Thursdays, 9 a.m. I go through the news of the day, and then I go through all your stocks and whatnot. Each show is a new record. It's incredible. So you guys are loving it, and it's great. And remember, tomorrow, 10 a.m. tomorrow Eastern time, I am going to be doing an hour and a half to 2 hours on chart reading. We're going to start at the very basics because we have so many new people. This thing has grown so quickly. I'm going to start from the very basics, go through pattern recognition, go through everything, really. I'm not going to go through individual stocks, but if you are a patron, you will have access to it. If you're not a patron, right now, join by tomorrow at 10 o'clock in the morning, and you will have access to that.
I think now is the time to mention the Patreon. We see so many of our patrons in there. Paul is giddy to show his special graph. Paul, go ahead and pull that graph up and let's get after it.
For everybody who's not a patron,
just give us 1 minute to listen to our little sales pitch. Obviously, what you're seeing in this show is not only hundreds.
This is not counting against my sales pitch time.
It does not. You're seeing hundreds of thousands of dollars put into a multi-camera show with some very wise guys, not including myself, about how to make a boatload of money and transition your life to grow your wealth. Paul, you know all the time how much I tell you about where you've taken me. And Trader Mo, the people in the Bid and Ask Nation are just absolutely loving it. So here is our 1 minute
I'm
pitch.
starting my timer. Ready?
Go ahead.
All right, guys. This Patreon, when I made this, was $14. It was as low as $8. Now it's $17, on its way to $49. These are our competitors, $1.99 a month. $199 a month, $35 a month. Look at all the X's of the things they do not have. You get 8 pillars, years of financial data going back to 1987, stock value calculator, real estate calculator, house flip calculator, Discord community. Biggest thing, 1,600 plus members. Talk about all your investing ideas. There are people who are friends in there. Guys, I'm telling you, 50 cents a day. If you're serious about this thing is only getting better and better. If you're at all serious about investing, you're crazy for not signing up. We get 20 or 30 a day. The price will be going up. We were hoping to get 725 by the end of the year. We have 1,650 as of right now. You're crazy. I still have 16 seconds. What am I gonna do with my time? Just sign up. I guarantee, just for the fact that you'll want it in the future, get it now for 17, because when it's 50, you can't get it for 17 anymore. But if you buy it for 17, you get it for 17 forever. Thank you very much. Talk to you later.
Paul, you're not gonna look at banking companies.
No, I don't
right?
look at banking or insurance, or because they do their finances all different. Gary finally emailed me the other day and said, Paul, I have a banking book for you. I bought it and Mo bought it. I literally wanted to gouge my eyes out for how boring the book was. I mean, banking is very tough. It's not a matter of cash flowing like that. I mean, as Gary once said to me, Paul, not only can I not explain to you free cash flow in a bank, I bet you there are bank CFOs who can't really explain to you the free cash flow bank. It's a very complicated matter. When we got trained a little bit by one of Gary's former students in banking, literally we didn't talk about free cash flow one time. Not one time did free cash flow come up. It was a completely different metric. I do not follow. And the insurance companies, you want to buy insurance companies, buy Berkshire Hathaway. They're very good at insurance. Stick with them.
M1 Gunner is asking, are the Discord chat rooms free or do we access through the app? No. So as a patron, guys, you do get immediate access to Discord. We sort of throw you in and you can see all the chats. You can start talking to the people you see.
To answer your question, Discord is free with the Patreon membership.
Thank you, Paul. Appreciate that. Okay, Paul, I would say that folks are asking for some other ones, guys. I think we recently did Scott's Miracle Grow, but someone asked about that. But I'd really like to look at, Paul, is BJ's Wholesales Club. We've never looked at this one.
BJ's.
I don't know who actually just...
I love BJ's.
Now, come on now. Be careful there with where you're headed with that, okay?
It's like Howard Stern is like, blank a doodle do.
Blank a doodle do. Okay.
Can't get in trouble for that.
Okay. BJ's.
I've never been inside of BJ's Wholesale Club. I only know of one. Do you know? There's one in off Harvard. Is that when you go to? You go to Costco.
It's an American membership-only warehouse club based in Westboro, Massachusetts. They have 219 locations.
Did they just recently go public again?
I see a 5-year. Oh no, you're right. I see my 5-year chart's only pulling up a couple years. So, shall we get after it, Paul? Your name? Yeah. It's Paul, right?
It is. Sorry, I was just looking to make sure I'm verifying. Okay, guys. 5 points. So basically, a $6 billion company.
Ticker symbol BJ.
$6 billion company, $15 billion in revenue, PE 13.8, check mark, very low profit margin, X. And this is another reason why I'm going to get rid of profit margin and PE, but they're going to have a very low profit margin due to, the fact that they're a grocery store essentially. Free cash from last year, $650 million bucks. Okay, so right now I'm looking at that, and off the dribble it seems a little high as a company, but we'll figure it out. We'll go see what it is. The return on invested capital, 4.3%, not very good. That's basically what kind of return can they get on their own invested capital, which is through debt or through equity? Not very high. We want to see a 5-year return of over 12%, but the market's going to do about 10%, so we'll see. Income statement.
So Paul, you weren't sort of thrilled with that $650 million free cash flow to $6 billion market cap? That doesn't tickle you?
What was the market cap?
$6 billion.
I'm sorry. I was looking at revenue. You're right. That's really good.
Yeah. So $650 million is the free cash flow.
I was looking at the revenue there at $15 billion as the market cap. Oh my gosh. Wow. That's that's pretty good.
Pretty good, right?
Good catch there, Seth.
Okay, so we have one check.
All right. I'm excited.
Oh, now he's ready to go. Okay, one check for PE. Profit margins low, which is expected.
Yep.
For this environment. And let's go. Revenue growth is pillar number 3.
12.75, 15.4. Check mark there.
Okay. Profit growth.
50 to 421. Check mark there.
Wow. 50 to 421.
That's a big jump.
Okay. How about shares outstanding, which is pillar number 5? I love pillar number 5, Paul.
It's up. 126 to 135.64. The good news is it's down over the last 2 years, but it did jump up in 1 year. Maybe they made an acquisition. I have no idea.
It's an X for shares. Current assets over current liabilities.
1.6 billion versus 2.2. That's an X. But remember I said earlier, food and grocery stores tend to have a negative on the current assets to current liabilities metric.
Why is that?
I think they do a lot on credit.
Okay.
That's another one that I'm thinking about getting rid of. Because about a third of the companies in the S&P don't have enough current assets to go over current liabilities. It's something to look at, but I don't think it's. We're changing the 8 pillars. That's the good news for the better.
Okay, free cash flow growth. We've already sort of determined this, right? It's right in there. This is the Everything Money software you get as a patron April 15th. If you're asking, you're getting this. And how are things looking for that April 15th? And when you set a date, Paul, you're serious about it. It's happening, right?
I think we could release it today.
Oh, really? Okay.
Yeah, but I want to release more things on April 15th. And I want to work through my own bugs a little bit. But I think we can release it today. We'd have a lot of bugs popping up, but we could easily release it today.
Interesting. All right, we were at free cash flow. We did that. So
no, we didn't.
I'm sorry. Go ahead.
Over the last 5 years, 72.6 to 650. Over the last 4 years, that's a check mark. Now, guys, last year was a big year for staying home. So I imagine they made a lot of revenue. Look at the big jump in free cash flow over the last year. You got to make sure this is sustainable because this has jumped up over 4 times. You follow what I'm saying?
Yes.
So that's the question I ask here is this sustainable? On the 8 pillars overall, yeah, see, it doesn't have, this is one of the bugs. If it doesn't have all 5 years of data, it shows as an X, even though it's only 4 years. So that's one of the bugs you have to work on. Actually, can somebody, can I write that down to myself real quick?
Please do. Trader Mo, what are your thoughts on trading BJ's warehouse stock?
I'm excited. I like this one.
Okay. I see the golfing gaining stick already. Go ahead.
Yeah, so we're coming up through the sweet spot very nicely.
Candlestick, more like candle.
Okay, Paul. Go ahead.
Our bid and ask difference a little bit high. I don't love it, but today we wouldn't be doing anything today. I think that if we get some green engulfing candlesticks like that, maybe 2 more days, this thing is a buy. I like this a lot. And I think we can probably get a run to about $50 a share. So hopefully I can get in around 45 and grab $5 and go from there. I like this a lot.
Wow, Mo, you don't say that often.
No, I don't. This one, right when I pulled it up, I was like, I'm excited for this one.
So, okay, because this is a little rare, a stupid person like me, one more time, like, why are you in love with this so much?
Okay, so the reason that I like this is because this red line down here is my overall trend. If I'm starting to buy a stock where the trend is up here towards this 80%, we're getting towards that area where it's kind of quote unquote overbought. So maybe the run is a little bit over. I explain it as this area right here between 80% and 32 is like a cookie jar. There's a lot of cookies in here, okay? When you start getting up towards 80%, there are less cookies available and you just have a bunch of crumbs in there.
Because it's overbought.
Exactly.
Okay.
So you're trying to grab like the few cents at the top, and that's what a lot of people try to find. What I like to do is find a stock that is coming right off this 32% line because it has so much room to grow. And to me, I can see this thing going up to about $50, $50.50. So if I can just get 2 more engulfing candlesticks, and the engulfing candlesticks are just buy signals for me that the momentum is moving in that direction, then I can go ahead and buy it. This stochastic, instead of being at probably, what is it now? Well, it's probably like 35% now. It might be at 40%. We have 40% basically to run up. Hopefully we can grab $5 a share.
If this interests you, one of our playlists on the YouTube channel is the Trading 101, which again I started, and one of our dear patrons made. Folks are working with you, Mo, to like make some documents on how to get you guys going in the right direction, get your charts going, get all this going. So
the patrons are great. They're so helpful. I basically said, guys, this thing has grown faster than I can imagine. I need help. And just guys just stepped up and just helped out make documents and helped all the new members come in. Like days like today, I can't be there for 4 hours in the Discord. They're in there helping. It's a great community.
Paul, what are you finding over there?
I'm just talking to Bernard asked a very, very good question. He said, hey, there are multiple ways to calculate return on invested capital, and he is right. The one I use is the same one that Sven Carlin uses, and that is I take the profit over the last 5 years, and I divide it by the most recent quarter of non-current, I'll just show you on the balance sheet.
Go ahead.
I always forget the name. Non-current portion of LTD and capital lease obligation, plus long-term liabilities, plus shareholders' equity. So it's net income, net operating income, 5 years, divided by the most recent quarter of these things added together. That's what I use. Because basically it's like, I don't want to give one specific year. I want to look at all, and by the way, I probably should do something like the average of those three together of the last 5 years. I probably should do that, but I just do all of it. If that's what he uses, and I was just like, yeah, that makes the most sense to me. Awkward.
Oh, I'm just, there's a lot of really smart people on here. And one says, if the market beats 90% of money managers over the long term, why doesn't Paul drip feed into the market himself? I know.
Well, I know I'm going to beat the market. I mean, there's no way I don't beat the market over long periods of time. And I say that with absolute maximum of arrogance and cockiness. And if I was anybody else in the world, I'd be like, this guy's not going to. I just see how I stick to systems all the time. Guys, I've been out of the market for 5 years and never blinked an eye. I shouldn't say never blinked an eye, but I never got into the market. In terms of, the most I ever had was like 6 or 7% of my money in the market in the last 4.5 years. I'm not worried about it. I'm going to keep doing it, and I will crush the market over long periods of time. When I say crush, 5 to 8% a year, I believe I can do. I know that's arrogant. People might think you're crazy.
Better than the market.
And you guys all think, well, let me invest with Paul. The problem is you wouldn't be able to handle it.
That's true.
That's the discipline of being able to say,
patience.
Wait, the market was up 20%. I was only up 8%. Yeah, I'm fine with that. That doesn't bother me in the least bit. Everybody else, it bothers them. Me, okay, great, I'm fine. Because there's reasons for it. And I'm okay with that. And I know it makes money in the long run.
Final take on BJ's.
I'd rather buy Costco.
Is that true, Mo? Not from your end.
His perspective is different.
You mean from a trading perspective?
Yeah.
Oh, I don't know. You want me to
No.
Okay.
That was wrong thing to say. I meant I thought in value investing term. I'm sure you.
Yeah,
agree.
I'm not sure.
All right, that was BJ's Warehouse. Paul, people are asking about Chinese stocks, South Korean stocks. Are we ever going to open up? We are going to open up our Everything Money software to analyze some of these
Europeans.
Thank you, Mo.
Yeah, European stocks.
Yeah, I talked to my data providers on European stocks. It's quite pricey. Once we get to a certain Patreon level, I will do it. But literally, the European stocks alone is a multiple 6-figure fee every single year. I don't want to make it seem like I don't care about that, but right now, every foreign person, everybody can buy all stocks. I just want to focus on the U.S. stocks. That's where we're at. And Mo and I also built the software for us internally. I will definitely have foreign stocks at some point. But for right now, the idea of spending $150,000, $200,000 a year just on foreign stocks, and it's not even all of them. It's like only 14 exchanges. Just didn't seem like it made sense to me. And I was just like, this seems like a lot.
And guys, don't forget why we're here. We're here to teach you. So Paul has taught you how to analyze these. So you guys can go in there and do these analysis on your foreign stocks. It doesn't mean that you can't go do them. So remember, we're teaching you how to do these things. We don't want to just be handing you the information. We want you to know how to do it too.
Yeah. Okay, great. I appreciate everyone out there, of course, for watching and fondling that thumbs up ever so gently. I do think, Paul, we have some requests for Builders Firstsource. The ticker symbol is BLDR. BLDR. This is Builders Firstsource. This is a millwork company. It's a Fortune 500 company that's a manufacturer and supplier of building materials, which is very hot right now, Paul. It's headquartered in Dallas, founded in 1998. They have 15,000 people working for them, and they do prefab components and value-added services in the U.S. Builders Firstsource.
I still don't know what they do.
I think it's just a building material holdings corporation.
Okay. $5 billion market cap. $8.5 billion in revenue. PE of 15, check. Profit margin of 3.6x. 5-year free cash flow of $200 million. Last year, only $150. However, last year, I would expect that because of a shutdown, that their free cash flow would have dropped because people weren't allowed on site for 3 or 4 months, et cetera. So 5-year return on invested capital is kind of low, 6.1%. So I don't like that. We should have over 10% unless you can get a massive discount in the company. That's where you look at to say kind of what kind of discount you want. Because the market, I believe, I'm doing more research on this, guys, I believe the market does about 10% because over long periods of time, the return on invested capital is what the market's going to do. So if you pay fair price. So 10% on the market, this one's at 6.1, which means they invest their capital basically and get a 6.1% return on their money. Whatever. Poop.
Our patrons know us so well. They say, Seth, you sound tired and surprised. I had a meeting with our Indian editor until about 12:30 at night with his morning last night. And I stayed up way too late talking about the company. So that's why I'm a little groggy today, Paul. But you know I love you. If I don't get that sleep, that beauty sleep, I mean, how can I even move on?
Yeah, I got a text from you at 12:30. When I looked at the
What did you text me
timestamp.
at 12:30?
Yeah, he texted me at 12:30. I'm like, man.
Jesus Christ, what'd you text
I was
us?
asleep by like 10.
I wish I would have. Okay, we're looking at building Firstsource, ticker symbol BLDR. Paul, let's look at the revenue growth over the past 5 years.
Okay, revenue growth for the past 5 years. 6.37, 8.56. Check mark there. Profit growth, 144 to 313. Now this is weird. So I talked about the free cash flow being down because of COVID, but their profit was up during COVID. So already I look at going, okay, well, what's the reason? That's weird. That's interesting. Oh my God, look at this company. 2011, it did $780 million in revenue. It's 10 times bigger. Wow. Okay, number of shares outstanding.
So actually profit is down, right, Paul?
Nope, profit's up.
Oh, sorry.
144 is less than 313.
Tim, can you get mentally prepared for a shorts check, a Paul shorts check? There's just too much. There's too many people talking about it. We need to get to it soon.
These are new shorts too.
They can't see it. They're going to need Tim to move the camera. So shares
All
outstanding.
these lunges I did yesterday.
Step to your left there and show them those. Look at those. Yeah, Tim, a little tilt. Look at that. Look at those legs.
These are provided by J. Crew.
Look at those.
They were on sale, 40% off.
Look at those the calves, Paul. Have you been doing like calf up?
Well, I always had strong calves, but I do calf raises and
But
plies.
no, it's really the above the
PAs.
knee muscle where we've been in love with. That's what the Bidnass Nation. Look at those puppies. You've been doing your squats. I see you do.
Spicer, give it to me lower.
Look at that engulfing canyon state with the overhang. Love it. So yes, that was Paul's shorts check. You're welcome, all you crazy patrons, you minions out there. Okay, builders first. Let's do a shares outstanding, Paul.
This is an X, 111 to 116. So it's about 5% more, a little less than 5% more. Not a big deal, but it's still more. And they've been consistently increasing the number of shares outstanding over time.
That's so funny. Current assets over current liabilities. You just stuck your hand down the middle of your pants.
I did. Wasn't it pretty good? $2 billion in current assets, $1 billion in current liabilities. Check mark there.
Check for current assets. Okay, you mentioned the free cash flow. Remind us of what they had.
So free cash flow, if you guys remember, is cash from operations less capital expenditures. The software, I added it in here to give you the actual line of free cash flow with the 5-year average of 200 million. It went from 165 down to 148, so that's an X. But I'd want to understand why they had a big change in free cash flow last year with a record earnings year. I don't know why that is. Either way.
Got you stumped a little bit?
Yeah, now I'm still going to take the average of 200 million.
Okay, 200
times,
million.
They're still growing, so call it 20. $4 billion company. And they're what, a $5 billion company?
Yeah, the actual market cap is
So
$5 billion.
We're not far off. We just got to drop 20% to be maybe reasonably worth it. But the one thing I want to know is, why did this free cash flow drop? And is it going to rebound? What's going to happen, et cetera?
So it was at this target price about just in October, end of October, beginning of November, it was around $32. It's now at 43.5. So it just needs to fall a little bit, and it has not been long since it's been there.
And of course, yeah. Look at the our 8 pillars chart, guys. Gives you everything you need to know and the differences. So the X here, Y profit margin 3.7, shares outstanding are up 6.3%. Cash flow is down 17.66 million, and the price of free cash flow is 24.69. And that's why it is not going well. Again, this is we have big time book value growth, but we have to see if that's actually my calculations right. I'm pretty sure I just did it correctly. Let's see where the balance, because Warren Buffett likes book value growth.
Mo, any news on this stock for trading?
Yeah, I like this because I like it for teaching purposes, and then I'll show you what to do with it. So I always say I want you guys to know your charts, and this is why I like people picking 5 to 10 stocks and just sticking with them. We can see that so on my charts, and this is why I like to use this on this show, every time it turns red, you can tell this is when the stochastic turns into a downtrend. And that means that your red line down here is crossing through yellow at some point. And you can see how short of a time frame that it changes to red. So again, today it changed to red, but to me, I look at this saying, over the past year and a half, every time it changes to red and goes into a negative trend, it only lasts for 10 days or so. So it's setting up for a nice short right now. And let me zoom in just to show you. We are going into the sweet spot in the negative direction, obviously. We have nice engulfing candlesticks coming down like this. But this is one where I'm not going to short it because I just know that the likelihood of it staying a short or giving me a lot of profits on it, it's not going to work. Could it work? Of course. But this is just like knowing your stock and move on to the next one and go find a better short that is going to actually be worth the squeeze.
Polyboy, final take on building Firstsource, BLDR.
I'm not opposed to it. Understand the future. It doesn't seem like it's that terribly overpriced, if at all. I mean, it may be. I don't know why last year they had record profit and less free cash flow, but these are part of the things to understand about the business and go from there. Big
Paul,
growth company.
All right, that's our take. Paul, this is an interesting question. Chris is bringing the hammer when it comes to questions. What has Paul made a better return on to date? Stocks, businesses, or properties?
Businesses by far. Guys, when I invest in a business, I'm investing $100,000, $200,000, and we're building it into a company that's going to be making hopefully millions of dollars a year, or even $500,000 we invested to make millions of dollars. It's the businesses by far and away, but they're also the hardest. And that's why I do have to make more money. Next would be real estate. Next would be stocks. Stocks actually, but I do something a little bit different, guys. Can I actually explain to you guys how, this is a good way to end it. I want to explain to you guys
Go ahead.
how I make a lot of money in stocks and real estate. I actually do something that I wouldn't recommend for people. So I have an account. Let's say I have an account, hypothetically, with $1 million in it. I take that account and I borrow 40% against it. Now, this isn't technically on margin because I'm not using it to buy stocks. I take that $400,000 and I use it to buy a piece of real estate for $2 million. I cash flow that real estate, make a lot of money. So now I took $1 million in stocks. I have that growing. It allows me to buy a $2 million piece of real estate with $400,000 that I borrowed from the stocks. So this is going to go up by 12 to 15% a year. This $400,000 is going to go up by 15 to 20% a year. That's what I do. This is why I make really, really, really good returns of 20% across my portfolio.
And if you're new to Paul Gabriel, this is not like hypothetical.
I've been doing this for 10 years.
I have seen him sitting in an airport waiting for a plane offer $12 million on a property. So like, again, I say, if you're watching some people giving you financial advice from their spare bedroom of their home or their basement, this is a guy who has a lot of capital moving in and out. Trader Mo, you're trading $100,000 a day in terms of money. I mean, this is a real deal, folks. And it's sometimes it's not even, I can't even believe I'm in front of it watching this with you guys, but keep going, Paul.
So this is what I do. This is how I make a lot of money. I do not recommend this for everybody because I have other businesses that can generate me the cash. But essentially, I now bought real estate with no money in my pocket because I borrowed against stocks they already have. They're going to grow at 12 or 15% a year to buy an asset that's going to make 15 to 20% a year. And that money I'm borrowing at 2 to 4% a year. So I look at this saying, overall, I have $1 million portfolio that's growing that allows me to buy a $2 million piece of real estate. But now, obviously, my account has more than $1 million in it. Add the numbers together, and it makes the big gains over long periods of time where I can make 20+% returns on my money with stocks and real estate combined. Separately, they don't make 20% a year. Together, they make over 20% a year because of using leverage. This is where I use leverage, or I think is smart leverage, buying two non-correlated assets in order to make money. That's why I'm fully comfortable with it.
Jorge is asking, what kind of business does Paul tend to invest in, and how does he find those type of investment opportunities?
Great question. I like to find businesses that other people struggle with. When I say that, I like businesses that require higher startup costs, but have a good return and good margin on the businesses. And the reason being is I don't want to compete with people who don't have capital. I don't want to compete with the average Joe who can just go in and start a business to compete with me. I want to do something that requires me, like our fantasy football game, Dynasty Owner. Go to dynastyowner.com. Dynasty Owner has cost 7 figures to make. And whenever somebody tells us they're going to start a fantasy game, I always laugh and say, let me know how the draft goes. Never happens. We know people in Cleveland who have a big fantasy sports podcast. They're bragging to us they're going to do a mock draft. And Tim and I looked at each other going, they're going to do a mock? Like, we were actually worried. Like, how is that so easy for them and it was hard for us? Well, we found out 6 months later it never launched because it was terrible. It didn't work. That's what I like. I like doing things that are very, very difficult. Why? Because I can find people and I'm patient. Look at this channel. We started this channel essentially 2 years ago in some other form, and I was patient. I waited. I kept waiting. And I'm not trying to brag. Seth and Mo themselves, I don't know if they would have waited that long. And I did, because why? I like doing it. I like doing it. I have other streams of income. But when it comes to businesses, I like businesses where they can get a high return on the money that I invest back in it, as well as be hard for other people to enter. High barrier to entry.
Yeah, I mean, for a normal person, I think out there, you have to start surrounding yourself with people like Paul and Mo. I surrounded myself, our friend Harry, Paul, and he was in a CEO group that they definitely have this chat going about businesses. I know you're not in love with this networking, but this is how we found my DGF business. It was a very poorly run spray graphite business that's been around for 70 years. We have some big clients, Berkshire Hathaway, Boeing. And so we found that business, and that's been incredible for us. I mean, and it hasn't even been that great buying a sort of beaten down business that has potential.
Yeah. What about it?
What's that?
What's the point of that?
I'm just saying, like, for a normal person saying, how do I get started? It's like, it's a process of not just,
Well, I mean, go start a business. Whatever you think you're going to be able to make money on, go try it. Go dabble into it. And it'll lead to other things. But the most important part is to try and get started. That's the most important part. I started with 1 2-unit built property in Toledo, Ohio in 2003. That's what I started with. I remember I was working 80 hours a week in 2004, 5, 6, and 7, running 135 units. Now I work way less than that, running with basically having started and running a big portfolio, at one point 1,000 apartments. And, you get better and better as time goes on. You become more efficient.
People are asking about my company, Paul. It is interesting for me to own this company. It's kind of laughable. I hardly ever bring it up, but especially since I'm a wedding photographer.
Right.
I was on a podcast recently, and they're like, "What do you do in your spare time?" I was like, "Oh, by the way, I bought this company. I bought this company with a friend in January of 2010. We were in 2020. We were in Mexico at the time.
Yep.
We bought this company for $47,000. It's a 70-year-old company, and we had some startup costs to get the product going. And our revenue last year was around $45,000. And so, we have weekly sales.
The revenue was $45,000, or the profit was?
The revenue was $45,000.
Oh, okay.
And we have a nice markup.
How's the revenue this year going?
It's better. It's up because the racetracks are opening up, the planes are opening up, and that's all.
Oh, that's right. You had the COVID stuff.
Yeah. So, but it's great. I mean, we have weekly meetings. Because what we learned from you about setting goals, who we talking to, who we following up with. But it's been great, and I hope I have it for a long time.
And FYI, guys,
go on.
I hope to never be involved in a CEO group ever.
Why is that?
I just think my personal opinion is, and I didn't know Harry was involved in one, so I can't say it about Harry, but every single time I've heard people be involved in a CEO group, it's more of, let me figure out a way to brag about myself as opposed, I mean, I'm sure they get a lot of benefit, but I always find it funny that I'm the one that reads the most, studies the most. Out of every single CEO I know, I'm the one that reads the most, studies the most, does all this stuff. Is it nice to have people you trust? Yeah, but it's almost like some of these CEO groups, like YPO, they force them into groups. And I'm like, but what if I don't like the people in there? What do I do?
Yeah, Maz is saying 45,000 revenue is better than Nikola. And I'll be the next one to leave on the bigger and better things. The DGF.
Oh, sad.
That's so sad that would be.
All right.
All right. For Trader Mo.
He's not leaving.
Wait a minute. We need to come over here.
Oh, Trader Mo.
Oh, yes. We're going to talk about this.
Groundbreaking.
We just got Pelotons, and Paul got the treadmill. I got the Bike Plus. This is my username, so add me. This is Paul's username, and then use this hashtag because I want to put something together where we do like Saturday rides or something as a big group or something. I think it would be so much fun. So a fitness channel is coming into the Discord. We're going to be able to talk about all of that. I want you guys, this has become like a crazy community of finance and stuff, but I want to make it a community of like a lot of friends, and this is great. So make sure you add me, El Rushmo, P. Gabriel, EM Cardio.
Paul, final take on today's live stream. It's Thursday. Is it Thursday or Tuesday? It's Thursday. We're heading into a wonderful weekend. What can you say to our wonderful watchers and patrons?
Well, first off, Marcus asked a question. What's your favorite business you run other than EM and Crossroads? Well, Crossroads is the main company. Everything else is underneath it. So EM is underneath it. I really do love like every business we have. Like literally every business we have, I love. There's no, I mean, this one's most exciting right now. Dynasty Owner was most exciting last year, but still Dynasty Owner and Everything Money are the ones I focus on the most because they're the most fun right now because they're growing and growing and growing. But my brother does a great job running the other businesses with all of our other owners, things like that. It's wonderful. I love hearing the updates on all of them. But final say.
The next Fireside Chat will be Friday, April 16th at 6 p.m. Eastern. We'll be at Paul's house. This is a Patreon exclusive, Patreon only Fireside Chat. And of course, we're halfway home to 50,000 subscribers where we'll be giving away a Tesla. And if you're a patron, you're automatically entered. So I guess That's amazing, Paul. Amazing odds. We have 1,600 patrons, and the Tesla's going to one of them. Amazing.
Guys, go sign up for the Patreon. This is literally the best thing you'll ever do in your life. I don't care about your spouse, your kids. The best thing you'll ever do in your life is to buy the Patreon at $17 a month. Women are going to flock to you. If you're a female right now, men that look like me will flock to you.
Of course.
I keep making the joke when people are like, "This is the best investment I've ever made." I'm like, "This is the best value play you've ever made. You're comparable to Warren Buffett now."
Yes, you're gonna get a much higher return on your money than Warren Buffett got by investing $17 a month.
Can we get up on that site today, Paul? Just release it.
No.
Okay. No. The answer is no. Okay.
April 15th, boys and girls.
Yes, Casey. Paul's butt plug lamp will be at the fireside chat. I did say that. So
Lisa wants me to keep the butt plug lamp.
I told you, it's the butt plug lamp or Howard.
I think we're gonna have. My idea was to put out stickers of just the lamp, just to have that lamp as the Everything Money lamp. It's so creepy, Paul. And yeah. All right, guys, that is our show. I'm feeling great about it. We wish you a wonderful weekend. We thank Don for his awesomeness. And yeah, we will see you next Tuesday live. Oh, Paul, we're doing some fun things next week, actually.
Seth,
go ahead, Mo.
Talk about my 10 a.m. thing tomorrow.
Oh, please do, because I forgot about it.
Okay, 10 a.m. tomorrow, guys. 10 a.m. tomorrow, Eastern time. I am going to do an hour and a half to 2 hour seminar on trading. I'm going to start at the basics, work my way up. This is Patreon only. It will be recorded, but it's only for Patreon. It's never going to go to the general public. So if you're not in there right now and you want to ask questions, it's going to be a Q&A session. Jump in there today, and you will be there tomorrow at 10 a.m. with me. That's tomorrow. Thanks for watching. Tickle that thumbs up on the way out. You know I love you, and I'll see you on Discord. The patrons, you know I love you. See you guys. Do you have a sound?